Disappointing numbers from Alphabet and Tesla spark a tech sell-off on Wall Street. The Nasdaq slips over 3%, the S&P 500 over 2.5% in the worst day since 2022. Asian markets open with deep cuts. The GIFT Nifty is also indicating a gap-down start for the Indian market. Crude prices snap a three-day losing streak as U.S. stockpiles decline, with Brent trading at around $81 a barrel. Gold prices edge higher as the dollar weakens. Finance Secretary T.V. Somanathan rules out a rollback of the decision to remove indexation benefits for real estate. Also says the 12.5% tax on long-term gains is intended to be the destination and not a transit stop. He also defends the higher tax on buybacks, says the government is only trying to kill it as an instrument of tax avoidance. Axis Bank reports an operationally weak quarter as deposit and advances growth slows while slippages surge. Intra-major L&T's revenue growth beats estimates, but a lower than expected margin leads to a miss on profit. 70% of the intraday cash market traders incurred losses in FY23 according to a SEBI study. 76% of those incurring losses are below the age of 30. Intraday traders in the cash market increased by 300% in the last 5 years. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines. A lot of important comments, clarifications on the budget fine print as well. We'll talk about it in greater detail through the course of the show. But first up, as always, let's talk about the global markets because there's a lot of action there. And the US markets ended with deep cuts, and that is something which we are seeing in the Asian markets as well. Remember, the Taiwanese market are shut for because of a typhoon there. But other than that, if you look at the other indices as well, they are largely in the red. That is about the Asian markets that I'm talking about. The Hang Seng is down 100 points. That's a 0.6% cut. Even across the board, if you look at the Kospi, it's down 1.8%. The other micro markets are also lower in trade. We have something like a Nikkei, which is sitting with cuts right now. So across the board, we are seeing a big cut. The yen, though, has marked a fourth straight day of strengthening against the US dollar. So that is something which is working in favor of the Japanese markets. But other than that, it's a sea of red. In fact, the GIFT Nifty will come up for you on the screen, and that one is indicating a start deep in the red. 238 points, that's a gap down start that we are talking about. That's the implied open for our own markets. Let's talk about the US markets now. Wall Street ended Wednesday's trading session sharply lower. The Dow shed more than 500 points, while the S&P slid 2.3%. The tech-heavy index plunged 650 points. S&P 500 and the Nasdaq are seeing their worst days since 2022. And as earnings season kicks in, with tech heavyweights beginning to report their second quarter earnings, Chief Investment Strategist at iCapital, Anastasia Amoroso, comments on how the expectations on big tech earnings have thinned out. Let's listen in.
The problem with tech is certainly not the secular growth. It's certainly not the capex cycle that I think will continue, but it's the fact that the expectations have gotten to be pretty stretched. And if I look at, for example, the earnings that have been revised higher and higher, they're not actually being revised higher for the future quarters. If I look at the valuations that have gotten a little bit stretched, so as a result, I just don't think that big cap tech can deliver the same type of earnings surprises as they have done in the past. And so, Frank, to your point, the way one analyst characterized Google's results today is no excitement. And I think that's what's really tough for tech right now.
All right, that's the global market action and opinion coming in as well. But how will these cues impact our own markets? We have our research team joining in to tell you what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Hormaz, let me come across to you first up. Looks like it could be a down day for our own markets.
A down day indeed, and that's what the GIFT Nifty is suggesting, almost a 250-point downtick as we speak. And so not a good start at least, but now the question is, once you get that dip, will we see a recovery as we have been seeing in the last two trading sessions? We saw a panic low that we made during budget day, and we saw a 400-point recovery. Yesterday too we made a recovery, but it was not very convincing. We tested levels of 24,300 and then recovered to end in the red. But then 24,500, which has now been a support all this while, now becomes a resistance for the index. We tested 24,500 on the upside yesterday, but could not sustain above those levels. And now 24,300 on the downside becomes very important, which most likely will be breached at the start of trade today itself. Now, banks have been the culprit all through this. The underperformers has been the banks, and they were the rescuers in yesterday's session as well. Otherwise, the cuts on the Nifty could have been far more. And the top three contributors as well on the downside, they're HDFC Bank, Axis Bank and SBI. They were the top three contributors on the downside, but then they all recovered almost 1% each from the lows of the day, and that is what contributed to the Nifty recovery from yesterday's trading session. But despite the pressure that we are seeing in the benchmark indices, the broader markets are in a league of their own. The mid-cap and the small-cap indices, the mid-cap index was up 1% yesterday, the small-cap index even better. So it would be interesting to see if there is a sharper sell-off in the broader markets, if we see the kind of start that is anticipated from the GIFT Nifty. We'll keep an eye out on specific stocks as well. The shrimp stocks have been on a tear over the last two sessions. Avanti Feeds, Apex Frozen, Waterbase have gained anywhere between 20 to 25% in the last two trading sessions. So we'll see if there is some bit of profit booking coming in today. Of course, today is the FNO expiry as well, so we'll keep an eye out on that. Earnings reactions will come in from L&T, Axis and a host of other stocks. Important names like DLF, Ashok Leyland, Tech Mahindra report results today. So all in all, it's an action-packed day today. It's expiry, and the GIFT Nifty is promising no let-off as we speak.
Okay, all right. That's right, Hormaz, because it is going to be a very action-packed day. But let's do one thing. Let's go across to Mangalam. He's joining in with all the cues from the FNO space this morning. Mangalam.
Good morning. So, if you look at the GIFT Nifty, it is indicating that the start would be in a deep shade of red, not too different from the shirt that I'm wearing right now. But the Nifty has also, the July series expiry. It's been a rather volatile week, a 250-point downtick. The Nifty in the July series so far is up around 435 points. 50% of that would be taken out in today's trading session itself. Though what we need to monitor is the low of the series, which is 23,986, which was on day one of the series. And the series high was 24,855 as well. The FIs, they've been selling in the cash market for 3 days now. They sold about 5,000 crores in yesterday's trading session. The DIs went ahead and bought just about 3,000 crores itself. And not only in cash, the FIs have been pulling out some money from index futures, adding some shorts as well. 3,600 crore yesterday. There was long unwinding to the tune of just about 3,000 contracts. But, the shorts added in the system were 40,000 contracts. And this mainly on the Nifty Bank. On the Nifty, there was actually a purchase by the FIIs. But, like we've been pointing out, over the last few days, the 5 trading sessions, FIs have structurally reduced their longs by almost 1.5 lakh contracts. From 81%, the long exposure is down to 69%, with net contracts down from 3.9 lakh contracts to about 2.4 lakh contracts as well. What was the street positioned for in terms of expiry? The 24,400 call and the 24,400 put, both of them have been very active. And this was, remember, ahead of the Wall Street move that we saw overnight. So the option writers were positioned for a 24,250 to 24,550 range on the Nifty. Let's see whether the lower end of that range stands out today. The key to watch out for would be the way Nifty Bank performs after Axis Bank's numbers, Nifty IT, how that performs after Nasdaq's decline yesterday, and L&T post its numbers as well. Stocks in focus on day of the expiry. Idea enters FNO ban, and like we pointed out, SAIL and GNFC are both out of the FNO ban.
Okay, all right. Thank you so much, Mangalam, for that. Let me go across to Sudarshan. He will list out all the stocks to watch out for in today's trading session. Sudarshan, good morning.
Morning, Sonal. So we'll start with all the Nifty companies that have reported earnings, starting with Axis Bank. Headline numbers were in line, but the concern is asset quality. NPA sees an increase sequentially. Gross NPA rises by 7% and net NPA more than 9% sequentially. Slippages too were elevated, and it has increased 38% QOQ. L&T, it was an inline Q1 despite election, heat wave and labor shortage impact. Revenue has come in 6% higher than estimates, while margin has missed estimates by 30 basis points. Company, though, maintains FY25 guidance. Order inflow growth is seen at 10% and revenue growth is at 15%. SBI Life results were largely in line, with all the headline numbers almost coming in line or slightly missed to estimates. Value of new business has come in at 970 crore versus poll of rupees 1,000 crore, and margin has come in at 26.8% versus poll of 27.8%. JSPL Q1 was higher than estimates on higher sales volume and cost reduction. EBITDA has come in 8% higher than estimates, and margin was 70 bips higher than estimates. Standalone volumes has come in at 2.09 MT versus pole of 2 million tons. IGL results were largely better than estimates. Revenue was down 2%, but EBITDA was up 11% sequentially. Margin has risen 200 bips to 16.5%. Volumes have increased 5.3% year-on-year and down 1% sequentially. IEX earnings were higher year-on-year. Revenue was up 19%. EBITDA has increased 22%, and margin has increased 200 basis points YOY. Oracle Financial, it was a very strong set of earnings. EBITDA has risen 36% and margin was up 600 basis points year-on-year. RBL Bank, there is a news flow. Sources say Bearing P is likely to sell its entire 7.9% stake via block deals, and offer price for the same is likely at rupees 226 per share and size is rupees 1081 crore.
Okay, that is a long list. Thank you so much, Sudarshan, for joining in as always and telling us what stocks will be in focus. We'll slip into a break. Up next, we speak to the budget makers themselves as they clarify on the fine print of the new taxation measures announced in the budget. Welcome back. You're watching Power Breakfast on CNBC TV 18. It's time to get you some conversation we had with the budget makers. Revenue Secretary Sanjay Malhotra says that the government is expecting revenues of about 17,000 crore rupees from capital gains tax. Finance Secretary TV Somanathan also says that a 12.5% tax on long-term gains is intended to be the destination and not a transit. He termed the hike in STT as a mile nudge. Let's listen into a few excerpts from the conversation.
With this slight increase, especially on the short terms, there is hopefully we will end up getting more revenues, both from STT buyback and from the changes in the capital gains.
So what could that 1 lakh crore rupee number look like?
So we are expecting from the capital gains about 17,000 crore. What the future holds, insofar as rates are concerned, as far as my understanding goes, there cannot be a certainty. What we can actually make certain for you is that there is no retrospectivity. There is no retrospective taxation, and that we have been very conscious about when we make our tax laws.
But Mr. Somanathan, yesterday when I asked you this question,
I'll give you my answer, my own answer to that, and he's right. He's giving you the correct answer. My own answer is, as of now, I do not see a prospect of this being changed in the near future. I think if there was an intention to go further, it would have happened now. And it is certainly not the intention right now to go any further on this. But I cannot speak for, I said that too yesterday, that I can't speak for, switches. The intention is, this is not intended, as I said yesterday, this is not intended as a transit stop. It is not as if we are trying to do it in 6 monthly installments. Okay, we start with this, then no. It was intended to be an integration of all at one rate. And remember, we have chosen that one rate also to be neutral to the other asset classes, which is why we chose 12.5%. Right? I mean, we did 12.5%. We would have preferred 15%, perhaps, at least me individually. But 15 would have been definitely a rate increase for certain other classes, where after indexation it would have been more. So therefore we took a view. I mean, we don't take these final decisions, but at least my personal view was that 12.5 is a good balance. So that balance remains good at this level. And so there's no immediate intention to change anything. This is intended to be the destination. The ratio of futures and options trading to the volumes on the cash market in India is unprecedented globally and historically. If that is the case, I would say prima facie there is some room for concern. What the government would obviously want to encourage is investment. Now, investment in the stock market is investment, but speculation in the stock market, not necessarily bad, but is not investment. So some of the changes that were made or proposed yesterday on taxation, such as a higher rate on short-term capital gains, such as a higher transaction tax on futures and options, are sort of mild steps to nudge people in the right direction.
Okay, all right. That's the word coming in from the budget maker. Some important clarity there. But let's move on and talk about earnings now. Axis Bank reported an operationally weak set of first quarter numbers. Abhishek joins us with the details.
Well, it was an operational weak quarter for Axis Bank, and stress have begun to rise. Management has guided that stress will increase in the coming time. So deposits are up 12.8% YOY, but they have declined by 0.6% sequentially. YOY it's the weakest in last 6 quarters, and sequentially it's the weakest in last 4 quarters. Advances growth was at 14.2% YOY and about 1.6% sequentially. YOY and quarter on quarter it's the weakest loan growth that we have seen for Axis Bank in last 8 quarters. Quarter on quarter loan growth, if you take a look, SME book actually declined by 0.7%, retail was only 0.3%. It's the corporate book that actually pushed the loan growth this time around, growing by 5% quarter on quarter. Operationally, operating profit declined by 4.1% quarter on quarter. It's the first time that you are seeing a decline in last 8 quarters, or it's the weakest in last 8 quarters. Core operating profit grew by just 1.3% sequentially, which is the weakest in last 4 quarters. Now slippages came in close to 4,800 crores. Analysts were penciling a slippage of 4,000 to 4,500 crores. Annualized slippage ratio is one of the highest that you are seeing in last 6 quarters, close to about 2%. Annualized credit cost is the highest in last 12 quarters or 3 years, coming in at 1.04%. Management has guided that credit cost will increase going forward. Gross NPA ratio has increased quarter on quarter, which is the first time that you are seeing in last 3 years, and watch list have increased by 10.9% quarter on quarter. Return ratios are one of the lowest that you are seeing in last 6 quarters, 5 to 6 quarters. So ROA at 1.65%, ROE at 16.3%. CASA ratio in line with industry trend is at 16 quarter low, and their PNL with reference to ANA and PAT has beaten our poll. Back to you.
Okay, all right. Thank you so much for that, Abhishek. That's Axis Bank numbers. Let's slip into a break. Up next, we'll get you all the cues from the commodities market, so stay tuned for that. Welcome back. You're still tuned into Power Breakfast. Let's talk about an important report. 70% of intraday cash market traders incurred losses in FY23, according to a SEBI study. The study also revealed that 76% of those incurring losses are below the age of 30. Yash Jain is here with more on the key findings of the market regulators study.
Well, who can possibly forget last year's SEBI report, which spoke about how 9 out of 10 traders incur losses or lose money trading in the futures and options market. Now there's a new report which has come out from market regulator SEBI, which speaks about the losses incurred by traders of intraday equity cash market segment. Some startling figures, numbers, facts being revealed through this particular report. SEBI says that about 7 out of 10 intraday cash market traders incurred losses in FY23. That's about 71% of the total intraday traders. 8 out of 10 high-frequency cash market traders incurred losses in FY23. High-frequency traders are traders generally who execute more than 500 trades each year. According to SEBI, the percentage of loss makers amongst young traders was even higher at about 76% in FY23. Young traders are generally traders under the age of 30 years. According to SEBI, 1 out of 3 traders who traded in the equity cash market segment traded on an intraday basis. Also, SEBI says that intraday traders in the equity cash market segment increased by more than 300% between FY19 to FY23. What's more concerning is the age profiling of these traders and the risk which it gets. According to SEBI, share of young traders, that is less than 30 years of age, grew to 48% in FY23 as against just 18% in FY19. Now, the data which SEBI has collected and the sample space which it has taken is about 86% of the total traders on NSE collected from the top 10 brokers of the country. The intention, as SEBI says through this particular report, is to make people more aware about the risks that come along with intraday cash market trading.
All right, thank you so much, Yash, for joining us with those important details from the study. But let's talk about commodities now. Manisha Gupta is joining us with all the update. Good morning, Manisha. What's happening in that space? Equity markets overall looking down today.
Oh, well, yes, that's exactly the case with the commodities as well, and especially metals, Sonal, because if you look at the metal prices, we're trading at multi-month lows onto this one. A lot of funds now seem to be squaring positions as well because there is absolutely no positive data coming in. Chinese demand, the China economic data, the China measures have been all uneven. And then you have weaker data coming in from US and Japan. So we have the copper prices declining yet again by 2% in the overnight markets, now trading at a 4-month lows. In the overnight markets, silver prices fell by a percentage point. Aluminum, zinc, steel, iron ore, all of these commodities also declined anywhere between 0.5% to 2%. What the street will now watch for is the U.S. second quarter GDP numbers, and then tomorrow is the PCE price index numbers. So ahead of that, we've seen a bit of a decline come in for the dollar index, but even that has not been supportive. So not just metals, you have the energy prices trading slightly on the weaker side, and sugar, by the way, in the international markets is now trading at a 20-month lows. So most of the commodities have started weaker yet again today.
Okay, all right. Manisha, thank you so much for joining us. The similar state of the commodity markets as well. Let's move on. US President Joe Biden, in his first address after dropping out of the presidential race, said he had dropped out of the 2024 election to unite his party and his country and felt that it was time to pass the torch to the new generation.
Decided the best way forward is to pass the torch to a new generation. That's the best way to unite our nation. You know, there is a time and a place for long years of experience in public life. But there's also a time and a place for new voices, fresh voices, yes, younger voices. And that time and place is now.
Okay, all right. With that, it's curtains down on this edition of Power Breakfast. But do stay tuned. Bazaar Morning Call comes up next. It's going to be a crucial trading day.